Hello students, welcome back to GK's Education. I hope you are covering your syllabus well. If any problem is there, you can comment it downwards so that I can help you while completing your studies. So, how are you all? As you all know, the accounting of share capital is going on, and in the previous video, we did the point forfeiture of shares. It is very important as from the point of view of exam. So today we are further continuing that topic of forfeiture of shares and doing some practical problems to make the topic more clear in our thoughts. So let us do some more examples to understand the topic forfeiture of shares well. Here we are taking the examples where the shares were allotted on pro rata basis and then the forfeiture of share was done. So how the adjustments, how the calculations are to be done, let us find it out. Let's look at the first example. Firstly, I would like to request please like and subscribe my channel so that you can get all the videos well to make your subject clear. Let us come to the questions. First question is: A Limited issued 3 lakh equity shares of rupees 10 each at a premium of rupees 2 per share, payable as rupees 3 on application, rupees 5 on allotment including rupees 2 of premium, rupees 2 on first call and rupees 2 on second and final call. So 2 plus 2 4, 4 plus 3 7, 7 and 5 12 means 10 plus 2. Now applications were received for 4 lakh shares. There were 3 lakh shares but applications were received for 4 lakh shares, and pro rata allotment was made to all the applicants, means nobody's application was returned. The pro rata or proportionate allotment was made to all the applicants. The excess application money was adjusted towards the allotment. M, who was allotted 800 shares, failed to pay both the calls. He did not pay both the calls, and then his shares were forfeited after the second call. Record the necessary entries and show the balance sheet. First, we will make the note of amount adjusted in allotment. So shares applied were 4 lakh shares. Money received for that was 4 lakh into rupees 3, 12 lakh, and but shares allotted were only 3 lakh. So the money required for shares allotted was only 9 lakh rupees. We received 12 lakh but we required 9 lakh. So excess money was 3 lakh and it was adjusted in allotment money. So this is the adjustment required. Now let us check out the entries. First entry for the money received: bank account debit to equity share application account. Application money received on 4 lakh shares for rupees 3 per share. So 4 3 is a 12 lakh we received. And then equity share application account debit to equity share capital account to equity share allotment account. Amount transferred to capital of rupees 3 per share for 3 lakh shares, and excess money was transferred to share allotment account as it was adjusted. And then third entry will be equity share allotment account debit to equity share capital to securities premium reserve account. When the allotment money due on 3 lakh shares, it was total 5 lakh were called, 5 3s are 15, out of which 3 was the money, 3 was the capital money, and premium of rupees 2 was there. So 3 lakh into 2, 6 lakh for the securities premium reserve account, and the left out amount was rupees 3 for equity share capital account. Then bank account debit to equity share allotment. Now here as we have credited the allotment account with 3 lakh early, so the balance amount will be credited uh, by this time. 15 lakh minus that 3 lakh, that means 12 lakh, we will pass the entry with rupees 12 lakh, the remaining amount. Then now bank account debit, sorry, now after that the first call will be due. So the entry number 5 will be equity share first call account debit to equity share capital. Share first call amount due on 3 lakh shares at rupees 2 per share. So it will be 6 lakh rupees when the equity share capital. After the allotment money received, this entry will come first when the equity share capital account first call money will become due. Now, while receiving the money, bank account debit, we will make calls in arrears account debit to equity share first call. Now, for first call, how much money? Here we, as per the question, we noted down that M, who was allotted 800 shares, failed to pay both the calls. So he did not, for 800 shares he did not pay first and second call. Now here we will raise the calls in arrears account. In calls in arrears account, 800 shares into rupees 2, that is 1600. So credit will be given with total 6 lakh, but now 6 lakh minus 1600. So we, in bank account we will debit the balance amount 5,98,400. Now sixth entry, seventh entry, the second call will become due. Equity share second and final call account debit 6 lakh to equity share capital account. That means being the second call due on 3 lakh shares at the rupees 2, 6 lakh. And now again bank account debit, calls in arrears account debit to equity share second and final call. Credit of 6 lakh will be given, and then in calls in arrears, 800 shares into 2, that is 1600, will be debited, and the balance means 6 lakh minus 1600. The balance will be debited with bank account 5,98,400. So it will be debited with the bank account. So up to here the entries are there. Now the forfeiture entry will be there. How it will be done? Let us check. Very important part. Equity share capital account debit for 800 shares with the called up amount, that is rupees 10, 8,000. Here the premium, as it has been already received, so we will not give a debit to premium amount. It is only entered when we have not received the premium amount from the defaulter. So definitely equity share capital account debit with only the called up amount, the basic amount, not the premium, rupees 10, 8,000. And then to share forfeiture account, to calls in arrears. Calls in arrears will be credited with the total amount, that means 800 into 2 plus 2, 4 rupees, 800 into 4, 3200, and the balance 8000 minus 3200 means 4800, or the money already paid up by the defaulter. We can say it is credited to share forfeiture account. Now, if in the balance sheet we will see equity on the liability side, equity and liabilities, shareholders funds, share capital account will be 29 lakh 96,800. Reserves and surplus, that means the share premium will be entered in reserves and surplus as 6 lakh. So here it will be 35 lakh 96,800. And on asset sides, current assets, cash 35 lakh 96,800. So this is how the entries will move. This was the first example. Now let us move to a bit difficult example. Let us check it out. Yes, it is here. This example, D Limited issued shares 2 lakh of rupees 10 each as follows. On application we have to pay rupees 2 per share. 2 here. On allotment rupees 4 per share including the premium of rupees 1. So if 4 is there, then 2, 3 is the money of share and 1 is premium. So 3 plus 2 is 5, and first and final call rupees 5 per share. So 5 is here, 5 plus 3 8 plus 2 10, so 10 rupees are covered, and then the face value 10 rupees is covered and premium of rupees 1. Now applications were received for 4,90,000 shares. There were only 2 lakh shares, but applications were received for 4,90,000, and allotment was made as under. 1,30,000 shares were allotted to the applicants of 1,80,000 shares. Means 1,30,000 allotted for the people who applied for 1,80,000, and then 50,000 shares were allotted to the applicants of 1,60,000 shares. Now 20,000 shares were allotted to the applicants of 1,50,000 shares. Only 20,000 for 1,50,000 shares applied. Mr. A, to whom 520 shares were allotted in category 1, that means this category, did not pay the amount due on allotment and call. Now his shares were forfeited past the entries. Here first we will make the adjustment of how much money is received and how it was done. For the first category, if we see, applied for 1,80,000 shares but were allotted 130,000. So shares were applied 1,80,000 but shares were allotted 1,30,000. Now money received 1,80,000 into rupees 2 per share. 1,80,000 into 2. Money received was 3,60,000, but money required as shares allotted were 1,30,000. So 1,30,000 into 2. Money required was 2,60,000. 360 minus 260, 1 lakh was excess money, and it was adjusted in allotment, 1 lakh rupees. And similarly in the second category, shares applied were 1,60,000 but shares allotted were 50,000. So for applied share, money received was 3,20,000, but actually the money required was 50,000 into 2, 1 lakh rupees. So excess money 2,20,000. Now 2,20,000, out of it adjustment in allotment was 2 lakh rupees, and then adjustment in first call was 20,000. So all 2,20,000 was completely adjusted. For the third case, 20,000 shares were allotted for applied 1,50,000. Now 1,50,000 shares were applied, allotted 20,000. 1,50,000 money received was 3 lakh. 1,50,000 into 2, 3 lakh, but money required was 20,000 into 2, 40,000 only. So excess money 3 lakh minus 40, 2,60,000, out of which adjusted as per allotment. In allotment only for rupees 4 per share was required. So 4 into 4 to the 8 means 80,000 was required. And then for first call 5 rupees per share was required. So 5 into 2, 5 into 2, again 1 lakh. Out of 2,60,000, 80,000 adjusted in allotment, 1 lakh adjusted in first call. Even then the excess money was there. So 2,60,000 minus 80,000 minus 1 lakh, 80,000 excess is to be returned. This is how the adjustment will be made. And now we have to calculate how much shares were adjusted, how money was adjusted in the case of defaulter. He belonged to the first category, so we will apply unitary method. For 1,30,000 shares allotted, when applied for 1,80,000. Now 1 share was allotted when applied for 1,80,000 divided by 130. Now if 520 shares were allotted, then applied for 1,80,000 over 1,30,000 into 520, that means 720 shares. He applied for 720 shares when he got 520 shares. For 720 shares, he make the payment of 720 into 2, that means 1440. But money required was 520 into 2, 1040. So excess money was 400, and it was adjusted towards the allotment of the defaulter. Now let us check the entries. First entry was, the first entry is bank account debit to share application account, being the application money received for 4,90,000 shares at the rate of rupees 2 per share. So 490 into 2, 9,80,000. Now, share application account debit to share capital. Share application money on 2 lakh shares transferred to share capital. Only the application money transferred to share capital, that means 4 lakh to uh, we can say 2 lakh shares into rupees 2 per share, 4 lakh. And now the balance amount we will read. Share application account debit 5 lakh 80,000 means 980 minus 4 lakh 580. We are passing a separate entry, or we can make a combined entry also, but separate entry means we are doing it more clearly. Share application account debit 5 lakh 80,000 to bank. How? The excess money that we calculated here to be returned. So that 80,000 is we are returning here. To share allotment, the money adjusted in allotment 3 lakh 80,000. How it comes? Adjusted in allotment 1 lakh plus 2 lakh. 2 plus 1 3, plus in third category 80,000 adjusted. So 3 lakh 80,000 we have adjusted in allotment. And then two calls in advance, the money adjusted in calls. How? Adjusted in first call 20,000 this and 1 lakh this. So 1 lakh plus 20, 1 lakh 20,000 is adjusted in calls in advance. Now, application money treated allotment money when becomes due. Share allotment account debit to share capital to securities premium account. Share allotment account will be debited with 2 lakh into rupees 4. 2 lakh into 4. 2 lakh into 4 on the allotment money that we are going to call 8 lakh rupees. To share capital. Share capital will be credited with the face value, the part of the face value. That means 2 lakh into 3 rupees, 6 lakh, and 1 rupee per share is the premium. So 2 lakh into 1, 2 lakh rupees is the securities premium account. Now, bank account debit to share allotment account. How the money is adjusted? Let us find it out. See this entry. Allotment money due, as we did in the question, allotment money is due is 2 lakh into 4, that is 8 lakh rupees. Now money adjusted in allotment, here we did 3 lakh 80,000 is to be 3 lakh 80,000 is adjusted towards the allotment. So minus 3 lakh 80,000, only 4 lakh 20,000 we have to receive. Now 4 lakh 20,000, and in the first call the allotment money not paid by A, as A was the defaulter, he did not pay the allotment money and call, so he did not pay the allotment money. How we will calculate the allotment money of A? Let us check. Amount due from A on allotment for 520 shares, amount due was 520 into 4, 2080, minus amount adjusted. The amount adjusted, as we did here, the amount adjusted in the case of A was rupees 400, means amount due was 2080, but he did not pay 4,400 as it was adjusted. So amount not paid by A on allotment is 1680. So out of 4 lakh 20,000, amount not paid by A will be subtracted, and then the allotment money actually received is 4 lakh 18,320. So we will make the entry of money received on share allotment bank account debit to share allotment 4 lakh 18,320. Now share first call will be due. Share first and final call account debit to share capital. First and final call is due by rupees 5 per share. So for 2 lakh shares, share first and final call 2 lakh shares into rupees 2 into rupees 5, that is 10 lakh rupees. And then bank to share first and final call. How we will calculate this amount? Let us find. Amount due on call is 10 lakh rupees minus amount adjusted, that we find out here 1 lakh plus 20,000 amount already adjusted, 1 lakh 20,000, so the balance is 8 lakh 80,000. Now amount not paid by A for 520 shares in 2 rupees 5 per share, that is 2600, is not paid by A, so we will subtract it and the balance comes out to be 8,77,400. So this will be entered here. Bank account debit to share first and final call 8,77,400. So this will be the point. And now the basic forfeiture entry. Share 520 shares were forfeited. Share capital account debit 520 into 10 as the total amount is called up 5200. Here securities premium account is debited as the defaulter did not pay the premium, so it will be debited. 520 into 1, it is 520 rupees. 2. Share allotment account, to share first and final call account, to share forfeiture account. Now for share allotment account we calculated that he did not pay 1680 rupees for share allotment, so that will be credited. Share first and final call, he did not pay 520 into 5, that means 2600, that we calculated. So to share forfeiture, the amount already paid by him, or we can say add this plus this, subtract amount not paid in adjustment, subtract the amount not paid for first call, the balancing figure will be the share forfeiture account. So this is how the forfeiture entry is done in the case the shares were forfeited when the allotment was made on pro rata basis. I hope you have got more clearance on this point on forfeiture. So keep learning, keep going. Do not forget to like and subscribe my channel. Thank you.